Stocks fizzle after yesterday's sizzle. Today's selling, a day after the largest one-day gain since April, may have been due in part to comments made last night by the president. He said he's ready to shut down the government unless Congress passes funding for a border wall with Mexico. One analyst called the comments unsettling, noting that they're not good for the investment environment. The deadline to pass a spending measure is at the end of next month, while at the same time, lawmakers face a deadline to raise the nation's debt limit. That's a much more serious issue for the markets. Today, Fitch Ratings Agency said the country's AAA rating is at risk if the debt ceiling is not raised, and that took some wind out of the market. The Dow Jones Industrial's down 87 to 21,812. NASDAQ off 19. S&P 500 lost 8. With the shadow of Washington hanging over the market, attention today also turned to Jackson Hole, Wyoming, where central bankers are getting ready to meet later this week. And the gathering comes at a critical time for investors. Pisani explains.
It was a quiet day, but the trading action could pick up later this week when the Federal Reserve meets with global central bankers for their annual Jackson Hole Symposium. The focus will be on Fed Chair Janet Yellen and ECB President Mario Draghi on Friday. And while we've already been told to expect no surprises from Draghi, the euro could rally if he discusses a timetable for unwinding the ECB's bond buying program. We'll see about that. In fact, we might be in for a battle between the euro and the dollar as the two banks look to rein in stimulus. This has been a big issue for a while now on where the central banks are going. This meeting also marks the end of an era of both easy money and possibly Janet Yellen's tenure as the Fed chair. The Fed's facing a dilemma right now because even though the unemployment rate is at a 16-year low, inflation is barely budging. If Yellen expresses any bit of confidence that inflation will pick up in the next few months, despite depressed energy and retail prices, markets could be in for a little bit of a surprise. Now, New York Fed President Bill Dudley, who's a close ally of Yellen's, said just last week that he still favors a third rate hike this year and expects to see firmer wage gains push inflation up towards the Fed's 2% objective. The other big question mark is the possibility of a U.S. government shutdown. President Donald Trump's comments about building a wall, even if it means shutting the government down, clearly has investors a little bit on edge today. But could that worry the Fed enough to put another rate hike on hold? Not sure about that, but it's doubtful. Right now, the markets are putting the odds of a December rate hike at roughly 40%. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.